Welcome back to DHN. Let's talk crypto. CPI numbers came out this morning. This, I am learning, is an indicator of the cost of goods and services within the economy. Lower numbers means things are going well. This also has a significant impact on Bitcoin and crypto prices. At time of recording, we've sustained that $18,000 level. If it holds throughout the day, could be looking at a pretty good weekend ahead of us. But let's jump into our first story. XDC, Globians, and Comtech Gold. You can now buy tokens backed fully by precious metals through Globians. Customers can buy GBEXG and silver tokens and redeem them in the real world. Right now, this can only be done through verified brokers working with Comtech and Globians. What is key here, though, is the fact that this tech can now scale. Countries around the world have been discussing for years ways to back their currencies with precious metals. This type of application makes it possible. Now, Amazon is also expanding its crypto reach. The smart contract platform Avalanche has just joined the Amazon Web Services ecosystem. This will see the Avalanche Developer Toolkit integrated into AWS, allowing them to launch nodes on the Avalanche blockchain. Amazon has only selected a handful of chains for their AWS. This shows us that they have an eye on the chains they feel could scale the best within their system. Now, Solana's on-chain activity is back to levels not seen before the FTX collapse. Data from Masari suggests upticks in addresses, volume, and NFT activity. I know that Solana just launched their Genopets Move to Earn game, which brings NFT tech to the real world. Also, the Solana Saga is set to come out this year still. I wouldn't get fooled by the headlines, folks. Solana still works as a product. And I think it might be time to do another video on Solana to show the number of big money players that brought this token to the market. Next, we have Binance US, one step closer to the acquisition of Voyager's assets. Pending a final court ruling in the coming weeks, Binance US will acquire Voyager, including creditors' assets. My question, if Binance was as bad as Reuters tries to make them out to be, why would they continue to get access to these type of moves? Binance also received clearance in Sweden this week to offer trade and sale of digital assets. While companies like Coinbase are laying off 20% of their staff, Binance plans to add another 30% to their global workforce. Which leads us into our global news. El Salvador once again leads the narrative of Bitcoin and crypto adoption. This week, President Bukele introduced securities laws for digital assets. This is to open the door for effective regulation of future digital assets in the nation and further Bitcoin application and investment products coming this year. No, this doesn't classify Bitcoin as a security there, but it would apply securities laws to digital assets. Curious to see which nations follow suit this year and how this all plays out. Hong Kong might be one of those. Their SEC is set to allow retail investors to get into highly liquid assets only starting this June. Being highly liquid is just one of the criteria they look to establish for the assets they look to trade there. Now, we have to talk about this situation here. The Ontario SEC forcing Crypto.com to delist Tether. Now, I've meditated on this for a couple of days. It looks like Canada has chosen their side in this stablecoin war. The reason CRO had to do this was due to the regulatory restrictions. At the same time, last year, we saw that CRO establish these types of guidelines with many nations. This means that we could see a trend where the nations that Circle is cleared in, but Tether isn't, begin to drop headlines similar to this. Enough of these back-to-back, folks. It's not going to be a good look for Tether. According to an investigation from the New York Attorney General back in 2021, we remember that 442 million Tether only equated to $61 million in deposit at the Bank of Montreal. What we are seeing are global stablecoin arrangements in real time. Another thing, too, I want to add to this is the fact that this is set to go into effect at the end of the month. If you haven't transferred your Tether or converted it, it will be auto-converted to USDC. That's significant because this is the second time we've seen protocols just switch the stablecoins they want to use. Remember when Binance US did the same thing? It's going to get real interesting this year, folks. Lastly, the UK is advancing quickly into stablecoin arrangements as well. Andrew Griffith, Treasury Secretary, stated that stablecoins could act as a gateway to CBDCs, but doubts they could displace stablecoins in a private market. What I want you to notice, though, is where this discussion was taking place and for what reason. Coming from the UK Treasury, the next step are to introduce wholesale stablecoin and financial market infrastructure sandboxes, both of which will be included in a bill that went before the House of Lords this week. See, it's not the stablecoin that you hold, it's do you hold the token that supports the right stablecoin.
Let's talk about stablecoins because they've become a central feature of this crypto market. How concerned, though, should we be?
Here's the way I think about this, Andrew. Today, as you know, stablecoins are a tool that facilitates trade within the crypto world. But because of their stability, their price stability relative to the dollar, I think there's a real possibility that they could be adopted more widely, that they could be used in the physical economy, especially when you consider the tremendous potential of the advantages of programmable money, which is inherent in stablecoins. So what I'd like to do is have a sensible regulatory framework that allows this space to thrive, allow the innovation to occur with some sensible consumer protections. And so that's what I've proposed, a flexible regulatory regime that gives stablecoin issuers some choices, some options, would require disclosure so that consumers know exactly what are the assets backing a given stablecoin, for instance, and what are the redemption rules and policies. Also, third-party attestation that would require to be audited periodically to make sure that consumers know what is backing this. And it would also have the privacy features of Gramm-Leach-Bliley.
Senator, what's your sense of whether we even need stablecoins, which is to say, should there just be a digital U.S. dollar?
You know, I'm kind of thinking exactly the opposite way around, Andrew. You know, we have stablecoins. They exist. They work. They have tremendous flexibility and some huge advantages. They do not interfere with the Fed's ability to conduct monetary policy as long as they're backed on a one-to-one basis. I'm not reflexively opposed to a central bank digital dollar, but I don't know how long it would take to get there. I don't know how well they would do it. I don't know if the design would be something that most Americans would be comfortable with. So we can wrestle with all that, but in the meantime, let's allow this new innovation to thrive.
If you found value in this content, hit that like button and share this information with a friend. DHN official merchandise is now available. The DHN Crypto Journal and SafePal links are in the description. Have a great day, have a prosperous day, and most importantly, if that money is digital, so is the hustle. I'll see y'all in the next video.